With us now is business journalist and the host of Full Disclosure on NPR One, Roben Farzad. Thanks so much for being with us. Look, we've had presidents before who've nudged one way or the other, wishing for lower interest rates at times. How different is what we're seeing now?
In the words of the late and immortal Charlie Murphy of The Chappelle Show, to paraphrase him, Trump is a habitual line crosser. He's shattered every taboo that's been out there. He's doing it right now with respect to what's happening in El Salvador and thumbing his nose at the judicial system. He's done it with respect to, suggesting that, you turn Gaza into a gigantic luxury oceanfront development. And clearly he wants to do it with respect to the Federal Reserve. Time was you'd leave that alone. That was another rail of government. You have a $30 trillion economy right now in the United States, and the Fed commandeers this balance sheet of about $6 or $7 trillion. So do you really want to play with that kind of fire?
Again, as one does, applying the Dave Chappelle Show to monetary policy happens all the time here. Look, what happens? How do you think the markets, and it's not just the markets, how do you think world economies will react if President Trump does try to force out Jerome Powell?
We are not an emerging market. We're not a frontier market. When things, in Turkey, when you have the president there who's very much kind of a strong arm type ruler, say, I'm thumbing my nose at the central bank. In fact, I'm firing the central bank. We should be expanding. We should be cutting interest rates during a time of inflation. And you start to see, bond yields at 30, 40% and lending choked off. That's the kind of fire you're dealing with. But here's the problem. The single most important metric in finance is the United States main interest rate. That is hardwired and embedded into every asset price on the planet. I mean, at the level of kind of mortgages in the United States, to the stock market's equity risk premium, to how emerging economies do to whether or not this dam gets built on a river in Eastern Europe. And that is so vital, and that has typically been sacrosanct, even though you've had Federal Reserve chairs who've stuck around, who were appointed maybe by a different party's president. You're not supposed to go there. I mean, if anything, there's kind of, complaining on the Hill. You do it at the margins, but you don't go for the jugular the way Trump just did.
So can I ask you to explain in simple terms? Because if Donald Trump does push out Jerome Powell one way or another, presumably he puts someone in there who would lower interest rates right now. That's what Trump is pushing for, lower interest rates at a time when Jerome Powell and others see the likelihood of rising inflation, because that's what tariffs do. They tend to be inflationary. What happens in simple terms if you cut rates while inflation is rising?
Money is cheaper. It's kind of like gasoline or an accelerant on a fire. People go out and spend more. There's more FOMO spending. You saw what happened in 2022 when the Fed made the mistake of keeping rates at zero for too long. And that was compounded with all of the stimulus that came in the pandemic, with PPP and those giant checks that went out, and how hard it is to extinguish that kind of inflation. And imagine, the job is not done, and then you pump all of these trillions of dollars back into the economy. That's not something that a president can easily talk his way out of. I mean, that's something that takes years and trillions of dollars to fix and clearly causes real pain.
Roben Farzad, great to see you this morning. Thanks so much for helping us out.